So today we're going to take a look at my high yield ETF spreadsheet, and we're going to go through these, and I want to show you how I determine if I want to purchase more shares or do I just want to sit and wait. Hello my friends, this is Legend. So today we're going to go over my spreadsheet here, and in my spreadsheet I do track each and every one of my high yield ETFs that I do own. I own a total of 15 now, as I did add in DIVO, as you can see right here. That's number 15. That's my newest one that I just entered this weekend. And as you can see, out of the 15, I am only down 4. I was down 5, but HOOY actually came up today and it closed at $50.10, which my real price per share is at $49.13 because I was able to purchase shares previously, which did bring my adjusted average down from that $50 and some odd cents to down to $49.13, which now, as I've stated many times, is I continually to drop my real price per share so that when that stock price actually decides to move up or trade sideways, I can then turn this into a green trade. But I want to show you what I use to decide if I want to purchase more shares or not. And by using my spreadsheet, it gives me a quick indicator of which ones I want to focus on if I'm going to purchase more shares. So if you would like to get a copy of this spreadsheet, you're more than welcome to go over, join the Discord, and in the Discord there will be a link under the spreadsheets channel where you can get a copy of this spreadsheet, and then you can enter in all of your own ETFs that you do own so that you can track and find out what your real price per share is, and to help determine which ones you need to focus on if you're using my method of lowering that real price per share so that eventually you can get these paid off. So if you would like a copy, that link will be in the pinned comments and in the description below. And also by joining my Discord, you'll be able to get notifications of any trades that I do make. They're not suggestions, they are only what I am getting into, what my buy prices are, and at the time that I do place those. So before we jump into this, if you don't mind, hit that like button, as it would be much appreciated. So the first thing that I look at, of course, with my spreadsheet, it tells me quick and easy which ones I want to focus on. If this number here is in a red cell, and this is on this line 23 right here, if that is in a red cell, that is my first indicator of the ones that I want to focus on to see if it's the right time to buy. If it is a green cell, like it is for PLTY, NVDY, MSTY, AMDY, YMAX, and so forth, then that means if I did purchase more shares of that particular ETF, it will raise that real price per share. And that's not how I play these high yield ETFs for the most part. So if you see that red cell there, like you see on CONY, ULTY, SMCY, and on DIVO, if that cell is red, then that's the list that you can focus on. So out of 15, there are only 4 of them that I need to watch at the current moment. So I have those entered in right over here on the side. Now, of course, I do have HOOY because that was red, but since it did go up, it's now green. So this one would not be one that I would be looking to purchase more shares. But just because it's red does not mean that I'm necessarily looking to purchase at that moment. That red cell on my stock tracker sheet only tells me the ones to look at. I then need to go to my charts, punch in that ticker, and then find out, is it the right time for me to buy or not? So we've got CONY here, and that's the first one we're going to look at. And the first thing I like to do is I turn on my Bollinger Band. As you can see, I've already got that turned on. and I want that RSI 2. Those are the only two indicators that I need to make that decision. And the first thing I look at is that Bollinger Band right here, and we can zoom in on that. There we go. And I am looking for that candle, and that's the current candle, to be on the bottom half of that Bollinger Band. Well, as you can see, we actually jumped on CONY today. It went from a close on Friday of $40.41 to a close of $42.70 today. A very nice move, and I'm sure a lot of it had to do with the move on Bitcoin. So the first thing I'm looking at is that Bollinger Band, and I want it to be on the bottom half of that Bollinger Band, and you can see it currently is not. So it does not meet the first criteria. If it did, then I would move to the RSI 2, which is this yellow line at the bottom of the screen here. And I would want that yellow line, which is the RSI 2, I would want it under this 10. So if it is currently at 91.02 because of that huge pop-up. So even though CONY is red, stating that if I did buy, it will lower my real price per share. And it would. And I still could purchase, and it would lower that real price per share. I'd like to buy on those pullbacks. Now, it does not necessarily mean that I will be able to get it at a lower price than what it's currently at, but those are the indicators that I am using to make that decision. So because CONY is not on the bottom half of that Bollinger Band and that RSI 2 is not under 10, I am passing on any purchases of CONY at the current time. So even though it's red, I am not buying. And for the next one, we have ULTY. And you can see on ULTY, we are on the top half of that Bollinger Band. We are not on the bottom half. So therefore, it does not meet that first criteria. And you can see that RSI 2, it's sitting at 77.09. I want that under 10. So I'm looking for that candle to be on the bottom half of this Bollinger Band, and I want that RSI 2 to be under 10. It does not meet that, so therefore I did not purchase any ULTY either. And how about SMCY? Now look at SMCY. We actually are on the bottom half of that Bollinger Band. Now, it did ride through that midpoint, and I'd prefer that candle to live underneath that midpoint of the Bollinger Band, and otherwise to open and close under it, and to be a red candle. And I would much prefer it to be at the bottom of the Bollinger Band, but I at least want it on the bottom half. It did close on the bottom half, but it did run through that midpoint. So that one is a user call, okay? That's up to you. If you want to go ahead and say that, well, it's on the bottom half of that Bollinger Band, then I may want to purchase. But either way, even though it is on the bottom half of that Bollinger Band, you take a look at the RSI 2 and it is not under 10. So it needs to come down a bit more before I would look to make a purchase. And of course, if it did that, that would definitely probably be at the bottom half of that Bollinger Band. So for SMCY, even though it was on the bottom half of that Bollinger Band, it did not get below 10 on the RSI 2. So that one was a hold for me as well. But come tomorrow, if it does continue to move down, that could be a potential buy for me. And since we have HOOY here, let's just go ahead and take a look. As you can see, it did have a nice little pop up, and that RSI 2 is skyrocketing, right? It's at an 88, and the close of that candle is on the top half of that Bollinger Band. And that blue line, that's the midpoint, okay? So top half being between the white line and the blue line, and the bottom half being from the blue line to the yellow line. And that's for the Bollinger Band. But since it is at the top half of the Bollinger Band and that RSI 2 is definitely not below 10, that one is a pass for me. But of course, since my stock tracker sheet does not call out as a red cell right here, that just tells me I don't even have to really pay attention to it at the moment. Because if I did purchase, I would be buying at that $50, but my real price per share is $49.13, which means that will raise that real price per share. And I'm not in the business to raise that real price per share. I only want to lower it on these high yield ETFs, as they are a bit more high risk. And the last one here was DIVO. Now for DIVO, you can see we do have a red cell, and that means that my real price per share is above that market price. So therefore, since that market price is under my real price per share, if I were to buy, it will lower that real price per share. But is it the right time to buy? Well, we look at DIVO here on the charts, and you can see right there, top of the Bollinger Band, right? We actually are almost at the top, right? But we are definitely on the top half of that Bollinger Band. So already that's a hold for me. But then if you look at that RSI2, it's at 83. So that again is not meeting the criteria for DIVO. So for that one, it's a hold for me. Now I will say on DIVO and JEPQ, these two here, I am playing a little bit different than I am on the rest of these high yield ETFs, as I see JEPQ and DIVO as a little bit more of a long-term play, because they are at least given price appreciation. Because here on DIVO, if I were to look at a 1-year chart and I turn on that moving average, I turn off the Bollinger Band, you can see it's just staying right above that 200-day moving average. And if I go to that 5-year chart, it stays right above that 200 MA there as well. So for me, that shows me that this wants to move up and to the right. Therefore, I don't mind buying and increasing my real price per share here because it's moving up in price versus a lot of the other high yield ETFs where they may only trade sideways, and in a lot of times here lately, trading down, right? But DIVO and JEPQ seem to be playing a little bit of a different game. So I'm willing to change the game up on those, and I want to hold those long term, and I am willing to buy them even though it will raise my real price per share. But what is that buy price that I'm willing to buy even that DIVO at? And just like before, that's where the Bollinger Band and the RSI2 comes into play. So for me, at this current layout of this indicator, that midpoint is around 44.74. So I definitely would want that price to be under 44.74. And the bottom of that Bollinger Band is currently at 44.14. So somewhere in the middle of there is around the price that I would be looking for. But keep in mind, the Bollinger Band is always moving, right? So as this moves up, then that midpoint and the lower part will also move up as well, or it could widen out. So the indicator is only good for the moment, but that's just to give you an idea roughly about the area that I'm looking at. And if it did get down in this area and that RSI2 does drop below that 10 here on that RSI2, then for me and me only, that could be a very good time to buy more shares of DIVO. And the same goes with JEPQ, because on JEPQ you can see it has a market price of $58.44 and my real price per share is $10.66. Now, this one here was much lower, but I did purchase this past week. I bought some more shares of JEPQ, and as I stated, I'm willing to raise that real price per share because JEPQ moves up and to the right. And we can look right here, and we can jump straight to my individual stock tracker sheet for JEPQ just by simply clicking that link. And it takes you right to that individual sheet. And right here is that purchase I did make. And that was at that $58.13 per share, and I bought 8 shares. It's currently at $58.44, but it did raise that real price per share. Now, what was it before? Well, I can just delete this out, and you can see it was around about $2.58, and that also includes that distribution. But I did make that purchase, so therefore that does raise that real price per share, and it takes it to that $10.66. But by doing so, that does extend out that payoff period for JEPQ. But like I said, if JEPQ is going to show me that it's moving up and to the right along with DIVO, then I'm willing to raise my average, and that's my adjusted average, up only because it moves up and to the right, which gives me also price appreciation. And back on JEPQ right here, again, where would I be looking to actually make a purchase of JEPQ? I would be willing to buy shares if it is under that midpoint of 58.11. And I would want that RSI too. I would want it under that 10. But why is JEPQ different? Well, just like DIVO, if we look at that 1 year chart and I turn off the Bollinger Band and I turn on that moving average, you can see that red line right there is the 200-day moving average, and it just stays above that 200-day moving average. And if I look at that 5-year chart, it is going up and to the right here as well. Now, you don't see a red line because JEPQ has not been out for 5 years. It came out around May of 2022. So for that reason, you won't see a red line, but you can see the chart for yourself that it is moving up and to the right. And that's the reason why I'm playing JEPQ and DIVO very differently than I am playing anything like ULTY or CONY or even SMCY, right? You can see the charts very different, right? That's a very different looking chart than DIVO. So if it's going to show me that it's moving up, I'm willing to make those purchases even though it's going to raise my adjusted average. So of course, to get back to the summary page from the individual sheet, I do have my nice little quick link right here. Hover over back to summary, click the summary link that pops up, and you're right back to the summary page where you can then quickly analyze and find out which ones you need to focus on. So even though they are red, it does not mean it's the right time to buy. It just tells you those are the ones you want to take a deeper look into to find out if it's the right time for you to purchase. But as you can see on my method, even though they are red, they were not the right time to make an additional purchase for me. So again, if you would like a copy of this spreadsheet, come on over, join the Discord. We would love to have you. The link is in the pinned comments and in the description below. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button and smash the like button, as it would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.